Calgary is becoming less affordable, which has sidelined a lot of buyers. If you're on the sidelines waiting for rates to come down, you should watch this video because rates may not come down enough, but prices continue to rise here in Calgary. Calgary's mayor doesn't think that you need to own a home, and it's not something that any of us should even prioritize because it gives you freedom and makes you feel liberated. Renting and not building any equity.
A segment of the population reject this idea of owning a home, and they're moving towards rental because it gives them more freedom.
On a completely unrelated note, here's an article of protesters at the mayor's home that she owns. The Calgary metro area is set to hit over 1.7 million people in just a year and a half. And if rates don't start coming down, our population could actually go up a lot faster than that. Think about it like this. Toronto and Vancouver are not affordable to the majority of Canadians. You would need over 100% of your household income to pay your monthly payments in Vancouver and about 85% in Toronto. Calgary is still less than 50%, and that's after all the appreciation that we've seen. I think as locals, we always forget that we're one of the most affordable and desirable large metros in all of North America. Last month, we saw a 7% increase in sales compared to last year. To put this into perspective, let's look at the historical data. Typically, April is a strong month, but this year's sales were 37% higher than long-term average. This isn't surprising. We're seeing about 70 people move to Calgary every single day. This one always surprises people, and it surprises me too because this is what active inventory looks like right now. Inventory is less than 50% of what it was in 2019, but the sales are almost double. I remember between 2017 and 2020, if someone would call and say that they wanted to sell a condo, I'd cringe because it would be a 4 to 12 month process and there would be a 70% chance that they were gonna lose money because that's when the market was flat. We'd also take days to go see a home and majority of the showings were on the weekend. Now you have to go see a home as soon as it hits the market, and if it's priced well, it's selling day one. Duplex or semi-detached sales kept growing in April, and we've seen almost an 18% year-to-date growth in sales. We have less than 1 month of inventory, and that's why we've seen a 13% growth since last April. All right, quick pause on this video. Listen, before I say anything, this isn't coming from me, this is coming from the entire team. We need more subs. A lot of our viewers are still not subscribed, so please like, share, and comment below on the type of content that you'd like to see next. I think understanding historical data and why certain market segments are seeing more success than others is important. At one point, we had too many semis being built and too many hitting the market only a few years ago. It was so common to see them sit for 3 to 6 months because sellers were taking a hit if they purchased between 2007 and 2015. 2015 is when we saw our oil crash, and because our market has historically been oil and gas dependent, we saw a negative population growth and people had to sell. Because we've seen such a massive surge in population and prices over the past few years, the more affordable multifamily homes that weren't moving just a few years ago are now the hottest market segment. Townhomes were selling at a loss of 10% or more at some points, and prices have now surged almost 25%. It's not just the population growth, we're obviously all struggling with rates. Every market is. The lower end of the market across Canada has pushed up over the past few years, and it's just because of affordability. Just look at the rate expectations. 4 months ago, we expected our first rate drop to be in April, and by the end of the year to be 1.25% lower. And now we're expecting our first rate drop to be in June, which is still pretty uncertain. By the end of the year to only go down up to 0.75%. Rates have affected a lot of buyers' decisions to purchase, but it's also trapped a lot of buyers into renting because while they're waiting for rates to come down, prices have come up on an average over 20%, and rents are up over 30% in the last 18 months. We've had a lot of our first-time home buyers change their minds or their criteria and buy a condo or a townhome instead of a house to start building equity and upgrade in the future. Townhome benchmark prices are now at $458,000, which is 2% better than March and 20% higher than this time last year. Apartments saw the unadjusted benchmark price hit $346,000, which is almost 18% higher than it was last April. Our expectations are that these two market segments have the most room for growth. We're expecting the apartment and townhome segment to be able to gain another 8 to 10% by the end of the year. Every buyer, every family has a different financial situation. So just because it's a good time to buy for some doesn't mean it's a good time to buy for others. So is it a good time to buy? Well, has it ever been a bad time to own? And when I wink, I want it to be a Bitcoin. There's never been a 10-year period in the market that's been down. Long-term holding of any quality desirable asset, whether it's real estate, a stock, or crypto, has always paid huge dividends. This market is very tough for buyers, especially first-time home buyers. Buying a home isn't a 1 to 3 year decision, it's more of a 10-year plus decision. And it doesn't matter what a real estate agent thinks, or an economist, or even your uncle that hasn't bought a house since 1988. The numbers need to make sense for you, and you need to see the value in it.